Now, let's take a look at a trading volatility event for the week starting Monday, the 22nd of April. And I want to focus on what's likely to happen next week for the US dollar around the release on Thursday at 1:30 p.m. UK time, Thursday 25th, on the preliminary release of first quarter GDP data out in the United States. Now, we know from lots of evidence to suggest that there is upside strength to a lot of this data coming out of the States, a resilience, I think, in the face of those high interest rates. And goes to show that why the Fed, I think, wants to keep on maintaining its stance of high interest rates to put its foot firmly on the throat of inflation. I think GDP number overall could come through with some surprising strength. Let's take a look at a trade around this. I want to show you likely levels on the dollar basket. Now, the dollar basket has received a lot of upside recently because of what's been happening with expectations on interest rate. The interest rate cuts being pushed out further and further. Now, we've got a band here that's started to be developed recently in this last week between 106.19 and 105.44. Now, if we get further upside for the dollar ahead of that release of the data next week and we get a break of this 106.19, I would then suggest the upside is then at 106.98, which was the highs that we had back on the 3rd of October last year. This is in the event of a strong GDP print, of which risks show potentially we could well see. If you are long on this going into next week, stock goes in this area down here. I would suggest your stop loss below the 105 level. If you're long on dollar going into next week, there is other economic data out next week which might give a steer to the dollar. But I think overall, with this strength in the US data, it will come as no surprise to many who are hawkish on the US economy, hawkish on the central bank activity. They've come as no surprise. I think we could well see some upside on that data out on Thursday. So I'm focusing on Thursday, 25th, on that DXY, on the preliminary first quarter print for US GDP.